Hi everyone, welcome back to Perry's podcast. This is a Q&A session and a viewer has asked about Warren Buffett and his returns through his investments which he made through Berkshire Hathaway. So the question is, Dear Vinod sir, I agree 2 billion is a good amount, but even Buffett at 5% on 100 billion is still under inflation. He is losing 2% to inflation every year. Why is he happy when he is losing to inflation?
It's not, because the inflation number is wrong.
Okay.
If you take Turkey's inflation or Egypt's inflation and say he's losing so many percentages wrong, because American inflation is not at 7%.
Okay.
And if Buffett is doing it, he will not be making such a fundamental mistake. It means your calculation somewhere is wrong. So you should revisit your calculation. You're right. Your investment should always beat inflation. And even Buffett preaches this, so he will not make a bet on this unless he's beating inflation.
Okay.
So if you take inflation, American inflation at 2-3%, he's still making 2% doing nothing. And it's zero risk.
Okay.
So for nothing, he's getting $2 billion. Okay, zero risk. Markets are all-time high. The Fed is, we do not know what is going to happen. We do not know geopolitically what is going to happen. And there's a lot of uncertainty for Buffett. So he'll wait and watch to see an opportune time to do. Because the problem for Buffett is different from you and me. Buffett cannot go buy little stocks, like buy Tiffin Coffee range. Because if he has to spend Tiffin Coffee range of $2 billion, it will take him forever to spend. So you can imagine $180 billion, how long it will take him to invest if he's doing Tiffin Coffee. So he has to take big positions and he has to wait for an opportune time. So he will wait for the market to have some huge volatility, a huge market shake-up. And when he sees like the pandemic correction or some huge correction, like the financial correction, when he knows fundamentally, he knows that company is sound, the business is sound, the market is overreacting, he'll move at that time and he'll happily buy.
Okay.
So that's what he's waiting for, to see an opportunity like that. Or like what was happening in Japan, where they're giving him money to invest in Japan and they're paying him interest also. So we cannot compare ourselves to Buffett. But what you can take away, key learning from that is, don't be aggressive in your returns. What you want is consistent, long-term, stable returns. And that's what Buffett is aiming for. So he's not trying to make, 5%, 10%, 20%. He's like, I'm getting this, it's consistent, it's safe, my capital is safe, go. So that is the same mindset and approach you should have. That is an investor mindset. Anything beyond that is not an investor anymore, he's starting to gamble.
And in this comment, he's mentioned that Buffett is having
$180 billion.
How will that amount be there? Will it be in form of bonds or cash reserves?
US Treasury bills, T-bills, he'll buy them.
Okay.
I don't know. You'll have to go into what you call Berkshire Hathaway's financial details, which are there because according to US law, most of it is public information. So you can deep dive and see how he stored all that money. And they'll keep moving it around.
Okay.
But logic dictates when US Treasury is giving you 5%, he'll take, and it's only short term. See, Fed is not going to keep these interest rates like these levels forever. It'll be there maybe at best a year. So he's enjoying it till then. So when interest rate starts going downwards, let's say it becomes 4%, 2%, let's say Fed keeps on cutting and brings it to 2%, then there's no more interest for him in keeping it there. He'll look for some other opportunity or move the fund somewhere else. Right now, he's making free cash.
Okay.
And he's collecting free cash. So why won't he? Even I would do the same thing if I was him. Even you would do the same thing. We are not him though. But it makes logical sense.
And Buffett will be investing in major stocks like Apple and American Express and lot of companies. So will that be included in this 180 billion?
No. This is free cash, Baba.
Okay.
This is like you open your wallet, you have money left over. No, that is what he is sitting on. This is fulus.
Okay.
He's free cash. He's waiting. It's like watching Dhoni. He's waiting for those loose balls, as they call. Straight out of the park. Till then, he'll take the 1 and 2s. He's not in a rush. He knows there's enough balls. There's enough batsmen. There's enough time. So he'll say, let's take some 1s and 2s. Let's make the fielders work. Let's make the bowler work. Let's make them sweat. So that's what he's doing. And he's not saying he's clearly knows what he's going to do with it. And I also have to realize there's also succession plan in Berkshire Hathaway and all that which is happening. So we have to wait and watch. It's interesting times though. Change is always good. It's a good question though. So I hope that answered. This is the same reason why we encourage keeping some of your money in bonds. Because it gives you stable returns. and you can be conservative. The portions of your portfolio, amount of risk you can take, you take. The remaining you can be conservative and keep it in bonds, and that will give you steady income and it's safe. Because the way Anand talks about bonds is he's not talking about trading in bonds. Buying and selling bonds is not what he's saying. He says you invest into a bond and you hold it for term till it matures. So that's the way he looks at it.
And then with that interest amount, you can buy stocks and all.
You can buy stocks, you can reinvest. Yeah. So that's the way you keep compounding and growing. And main reason why Anand says that is, same reason Buffett is doing it is to preserve the capital. Meaning the initial money which you put in, which is known as capital, you preserve that. You make sure you don't lose that.
That will not decrease.
Yes.
You will get the stability.
You don't gamble with that. So whatever 100 rupees you put to start this whole venture with, that 100 rupees is still safe. You can pull that out at least anytime you want.
So I hope that this video was informative and you had some knowledge about the Berkshire Hathaway. And if you found this video informative, please share it with your friends and subscribe to this channel for more kind of videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.